Right, to finish off the e-lecture for this week, I just wanted to more slowly and leisurely go through the answer here. So just bringing back the question. You've been seconded to help the chief actor in a large insurance company. So we're looking at writing multiple classes of both commercial and personal lines. So we're looking at all different types of insurance here. It doesn't mention whether or not there are life insurance issues as well, but many of the large insurance companies do offer life insurance, and we could mention an extra point there and probably get an extra mark for it. Don't want to mention too many points about life insurance because it's not a life insurance exam, but there's no harm in trying to mention that as well. The chief actor has just read a report stating that global warming may turn out to be more serious than previously thought. So you may want to think, what do you know about global warming? What are the risks that this will cause to an insurance company? So you don't want to be just answering a question about general risks. You want to be thinking, how is global warming going to impact on those risks? He wants you to write a report setting out the different issues that the company might face. So part A, for which we're going to get 6 marks. So 6 lots of 1.8 is a bit over about 11 minutes. So giving reference to a wide number of classes of business outlines some of the different risks that the business might face in the light of this report. So really what we're thinking here is just going round the different business streams and thinking, how does each one get impacted by global warming? So in the first part of the answer, I'm always feel in an exam you don't really want to stop writing too much, so think aloud onto the paper. And the first thing I mention here is that I'm going to increase the size a bit just so hopefully you can all see it. Okay, so it increases the likelihood of extreme weather events such as hurricanes. Well, that's the most obvious thing that global warming does, and I suppose equally obviously it tends to cause sea level rises, which can affect coastal areas. It can also affect, you can also get flooding from rivers bursting their banks as well. So we're just explaining why this is going to be an issue, and it may cause, and this is just a random idea, and there's no harm in this at all in the exam. If you just have a random idea as you're writing an exam, put it down, and there's no reason why you can't get credit for it. So it may cause changes in animal behaviour which could have an impact on agriculture, such as different pests having different amounts of survival success. So that's not in the notes anywhere, it's not particularly in the syllabus, but it's perfectly possible that that sort of thing might happen. It could affect the fishing industry, different coral reefs are affected by sea level changes, there are all sorts of potential impacts, all of which you can work into an exam question. So having sort of set out what the physics of it, if you like, the meteorology of it is, I then want to get into what the insurance issues are. So hurricanes, the biggest insurance events often tend to be hurricanes. If you work in the London market, if you work for a syndicate in the London market, your bonus will be determined to a considerable extent by how bad the hurricane season has been. So that's the biggest issue you want to get down on paper first. So hurricanes are very important to a major insurer with exposure to the USA. They tend to hit the USA hard, or the eastern USA hard. There's a hurricane season every year, and many of the properties there are highly insured. By contrast, when 230,000 people died in the Asian tsunami, it wasn't that big an insurance event because many of those people were not insured. A lot of it would hit poorer parts of the world. So from an insurance point of view, it's how heavily insured people are that is the massive issue. So we can make an extra point out of that, and so we're also likely to get more typhoons in the Asian region. Typhoon is just a different name for a hurricane, but this is less significant as there's less insurance coverage. Obviously that's changing over time as countries in the Pacific Rim get richer, and obviously if a typhoon hits Japan, then it's a serious issue from an insurance point of view. So rather than going through, well, houses might fall down, buildings might fall down, cars might get damaged and all that sort of thing in a hurricane. We can just really group together all types of policies, from household buildings to car insurance to commercial property, are seriously affected by this. We're not really going to get different marks for different types of buildings that are damaged. But then we want to go from looking at damage first of all to thinking what are the other areas of insurance we can think about how it's going to be affected. So, for example, fixed loss. If anybody has personal injuries, so they lose a leg in a building falling over, or they lose an eye or something, they'll be covered on the personal injuries claim. So personal injuries are going to be affected by this. There may also be more liability claims. So again, we're thinking round the different areas of insurance. If our clients might get sued because buildings fall over, or things like movable objects are not properly fixed down, and they cause injury to people, and our clients get sued. State clients may also have to pay out on claims for liability if they're seen as negligent. Well, that's where, as can often be the case, the state's the sort of easiest person to get money out of, if they've not given sufficient warnings for people to leave an area, and that means people get injured and harmed, and they might wish to sue the state. So if we're offering insurance to, certainly say, sort of councils in Britain or something, but possibly also states in America, then we may be liable for those sorts of liability claims. So that's looking at the issues where hurricanes are an issue. But let's move on to sea level rises. So we may have concentrations of risk, probably with a large insurer, less the case that we would have concentrations of risk around particular sea level areas. But it could be a large insurer where it had grown by sort of buying up smaller insurers, and some of those may have been round coastal areas. So we've got to be aware if we are at risk of we're insuring many properties around the coast. And it tends to be the actual buildings that are going to be hit by that, rather than the content. So, good to explain that, and we can make absolutely sure we get the mark for that point. And I just add in there, probably not going to get an extra mark for that, but we could have got a whole mark there, because it's a decent size point explaining the difference between household and contents in the context of sea level rises. So between this point, which is quite significant, and this addition, then possibly get a whole mark for those 2 points together. Now here we've managed to get sort of legislation into. So again, thinking of all the different areas you can try and make a point from, how might this affect legislation? Well, if you keep in touch with the news, it has been an issue in the last year or so in Britain where insurance companies have not wanted to insure houses on floodplains, and the government are acting to make sure that insurance companies have to. So, I mean, it's not a UK specific exam, but it's perfectly possible that that can happen in any particular country where laws change to reflect the fact that global warming is meaning that insured risks vary. Once you get to the point where effectively a property is uninsurable, then either the government has to step in and insure it, or you just can't get insurance, or the government can require insurance companies to insure a property. So there's different ways legislation can pan out in that sense, and it's worth making a point about that. So again, moving on to the next point, business interruption. Just thinking where are all the ideas I can get, where are all the different types of insurance. So business interruption is perfectly possible. Many businesses will be down for days, if not weeks, if there's a serious, or possibly months if there's a serious damage to their business, and that there'll be business interruption just from people having to leave an area while the storm passes through. And also we can get in legal costs if there are disputes over who's responsible for damage. For example, if your house had survived but the car next door has flown across the road in a tornado or something and hit your house, who's responsible for that? Difficult to blame the person who owns the car. You could argue it's not their fault, but that's why, when it's ambiguous, that's why lawyers get involved, and you can insure yourself against that risk. And if you're the insurance company, then you might be liable to pay out for those legal fees. And then just again thinking of where the other ideas, we can increase risk of ships sinking if there's more stormy weather, and could be a increased risk for aviation. Although with weather forecasting, I didn't make this point here, but with advanced weather forecasting, it should be an entirely manageable risk in the case of aviation. But there's also, if we'd had more time, we could have made the point, as is happening, I think right now in Japan, where a lot of flights can get cancelled because of weather events. Now that is something which could be insured, might not be insured. Perhaps the airline company will take that loss on the chin out of its own reserves, or it might reinsure it, because again, it's certainly going to incur costs for the company as they try and reroute people or pay people compensation. So more of those sort of events mean more potential insurance costs for us to bear. So you could write, as it's probably clear from sort of explaining each point, you could make each point a lot bigger, but the important thing is to get the point down and briefly explain what you've said. So a rule of thumb with all these questions is look at the number of marks, times it by 2, and write that many full coherent sentences, making a significant point in each one, and that should get you a good mark in the exam. So let's go talk through part B. Suggest strategies you might adopt to mitigate against these risks. Well, here, I mean, basically reinsurance is going to be sort of a big point here. So we're not going to just think, well, there's 8 points and one of them is reinsurance. So we need to think, well, I need to make more out of reinsurance than that. And I don't just want to sort of waffle. So I'm going to break down reinsurance into several areas. Now we'll come on to reinsurance later in the course. So these different types of reinsurance might not make much sense at the moment. But basically, that should say stop loss. The major areas of excessive loss reinsurance are risk excessive loss, which is insurance against individual risks exceeding a certain amount; aggregate excessive loss, which is insurance against a group of risks exceeding a certain amount; stop loss, which is reinsurance against the total losses the company writes exceeding a certain amount; and catastrophe excessive loss, which is insurance against an individual event, a catastrophe event, causing more than a certain amount of cost to the insurance company. So I basically just go through these and explain how we might use them. So stop loss is going to be expensive because the reinsurance company has to cover the whole of the risk over a certain amount, but it is the ultimate guarantee, and it does cap losses for any given insurance period. Aggregate XL also has some value as it covers a large number of total claims in a period of time. So again, we're just explaining why aggregate XL might be useful. Not massively, it's just cheaper than stop loss and not quite as good. So we could perhaps make a bit more of a point out of that. Then risk excessive loss, we just explain, although we're going to mention this here, just explain why it's not particularly significant in this case, unless there is some very significant event, like for example an oil rig which is damaged by the storms. That could cause a huge individual loss which might be covered by a risk excessive loss. But generally, risk excessive loss is not something that a large insurance company is going to be too excited about in this case. And catastrophe excessive loss is definitely a major area we should look at, as global warming tends to cause these sort of singular catastrophe events. So that's an important type of reinsurance to look at. We also need to sort of look at what other areas we can do to mitigate risk. And this is where it's more sort of thinking of the common sense things. I make this point first about if we're ahead of the reinsurance companies in assessing this risk, then we may get good value. If they're calculating premiums on the basis of previous historic data and we're able to anticipate greater risks ahead, we might get their pricing on the basis of previous historic data and therefore get some value out of this. So worth making that point there. Then we go on and look at what other areas can we mitigate risk. Well, we might have to change our policy offering, so we cap cover. We might say we just can't write insurance above a certain amount. Obviously the business is going to be less valuable then, so it's not an ideal solution. that an insurance company says we can't insure beyond a certain amount, but that's one thing we could consider doing. We can improve our underwriting rating, so we charge the appropriate premiums for floodplains of rivers, for example. Now that's an important point, because many many risks won't change hugely because of global warming. If you live in many parts of Britain, you're not in the coast, you're not near a floodplain, then is global warming going to affect you hugely? So it may be the case that we can simply be more selective about how we pick the risks to insure. So that's one way we can manage this increasing risk. And we could just stop offering insurance to certain parts of the country or certain parts of the world. It may become the point where we just don't want to be insuring, Florida and the southern states of the USA because the risks are too high, and it's just not worth it. So again, we can change how we offer policies. We can change who we offer policies to. We can also change sort of what policies we offer. We could move more from general. We could move more from general sort of damage policies, perhaps to more liability policies where there won't be as big an impact. So there's lots of things we can do to sort of try and mitigate the risks we've got and try and reduce the impact to the company. And this is one that try to actually manage claim experience is one that doesn't tend to be sort of mentioned that much in the core reading and the sort of standard text. But the more you can tighten up the claims experience, then the less you end up paying out. So, for example, if you define your cover such that if anybody is negligent in exposing their property to risk by leaving it in a hurricane, for example, then you wouldn't be covered. Obviously, the physical house has to be left in the hurricane. But if you were to say that cars were not covered if left in the hurricane, you should actually have driven away in them. Then you could actually manage down your costs of paying out on claims. So that's another way of managing down the risk, which is always worth considering. And we can also, and this is one way where insurance can make the world a bit safer, we can actually make insurance conditional on meeting certain conditions. So just like with getting insurance on a house can be conditional on having proper locks on the doors and on the windows, well, we can make insuring a house against being damaged by tornadoes or hurricanes conditional on having the right building materials and safer building practices. And there is a real risk with global warming that as the damage gets done in poorer parts of the world, if they're getting more and more insurance but they're not improving their building conditions, then there could be lots of huge expenses there. So this is one of the way of managing down that risk, to say, well, we're only insuring property against certain outcomes if it is built to a certain standard. So again, we had 4 marks for that, and you can see we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 reasonable sized points. So we'd hope that each of those points will get us half a mark, so we should be comfortably getting our 4 marks there. And then C, suggest and explain that there are some new business opportunities arising from this information. Again, we've got to think outside the box a little bit. So one business opportunity, as we've already mentioned. Now it's worth just putting it again here to make the point that, you're probably not going to get marked both times, but just make the point that that this is an important potential business opportunity, that we may get well-priced insurance. So it's not just business opportunities, new products to sell, but opportunity to make existing business more profitable by getting reinsurance at better rates. The more and the better we can understand this, we may be able to get out of uncompetitive areas of risk before other companies do. For example, if we realise before other companies that certain areas of floodplains can't be realistically insured, and we get out of that area, then we can potentially get out before the government doesn't allow further people to get out. So there's a real opportunity there to be ahead of other companies and be more competitive by doing the underwriting better. And a really important point with people think of risk as a bad thing, but risk is what keeps the insurance company, the insurance world in business. So the fact that there is risk there is something that insurance actually should be say happy about, but it is actually what keeps you in a job. So there is more need for insurance. That should make people more willing to pay for insurance, and it should push premiums up. So it is a profit opportunity for the business. And you notice I've only got 3 points so far. I want to get 2 marks for this part, so I'm really trying to squeeze out some extra points, and it's time to be a bit creative. So global warming might mean the North Pole melts, and that's probably not good news from most points of view, but additional shipping routes may emerge, and additional business to insure marine shipping. So it's a bit of a tangential point, but if you're struggling to get marks for a question, it's well worth trying out something a bit random like that. And we can also think of, well, anything. This sort of question, anything can be a sensible point. So all the sort of new industries that might start up, there'll be lots of potential damage insurance that can be done on wind turbines, for example, or there's engineering insurance, construction issues there, employers' liability if people get injured. There's all sorts of insurance that can be sold to those new green industries. Okay, so that's just gives you an explanation of how I like to think about going about an actuarial question. The say most important point really is that you should be looking to be writing fairly constantly. These are not exams where you can do 10 minutes thinking and then a couple of sentences and have a rest. You'll be writing fairly intensely for the whole of the period to make sure you get the marks. Always explain why you've said what you've said, and always try and reference things to the question. So all these points, they're all motivated by the course on general insurance. Every point we've made has some reference back to the course on general insurance, but it's through the vehicle of this particular example of climate change. So I hope that makes it clearer, the sort of thing that's expected when you answer an exam question. Okay, I'm going to leave the other 2 questions for now that I gave you for homework to go through in class and see how we get on with that. I think I'll also look at sort of mind map brainstorming type ideas as well to show you how to think about structuring ideas. Okay.